Crypto taxes can be confusing. In this video, we're going to talk about some basic questions that the average American may be asking about their crypto investment. This is going to be more of a question and answer format. And if you find somebody that needs these videos to kind of understand what's going on with their taxes, with their cryptocurrencies, then definitely share this with them. Go ahead and hit that like button as well, because that makes a big difference to our channel. It helps put this out to more people. All right, so the first question, I'm just reading it off my notes right here, is going to be, if I have a crypto account and within that crypto account, I bought Bitcoin and then sold for a profit, but do not transfer the money out of the account, will I still need to pay my taxes? Well, short answer is yes, of course you do. This is no different than a stock that you're buying and selling and having to pay taxes on. This is still an asset in that point that if you're making a full transaction and that transaction is completed, then you will have to pay taxes. What I mean by a transaction is you are buying something and then you are selling something. And at that moment, when you hit that sell button, that is when that transaction is finished, and that causes a taxable trigger of an event to occur. And because of that, you're gonna have to pay taxes based on if that meets into the short-term or long-term capital gains rate. All right, so the next question is gonna be, if I buy Bitcoin and hold it and never sell, do I have to pay taxes on my gains? And the answer to that one is no, because you're not finishing your transaction, right? You have only bought and you have not sold. And so because you're doing that, you are getting unrealized gains of the change in the amount of the increase in the price of Bitcoin. So say you bought Bitcoin at $10,000 and went up to $60,000, you have unrealized gain of $50,000 that does not cause you to have to pay taxes because you have not realized those gains. All right, question number 3 is going to be, how much do I have to pay in taxes on my cryptocurrency gains? All right, so that actually is going to depend on your certain situation. And so you're going to be paying only on the amount that you have profited. And what I mean by that is, going back to our previous example, if you bought Bitcoin at $10,000 and you bought $10,000 worth of it and it went up $60,000, you now have a gain of $50,000. And when you go to sell that, you will be realizing a gain of $50,000. And at that point, you will only be taxed on that gain of $50,000. That initial $10,000 investment does not count and does not be taxed, because that is your initial amount and there's no reason to tax you on your initial investment, only on the gains that are occurring. And it'll also depend on your short-term and long-term capital gains and when you sold that particular Bitcoin. And so in the case that we were talking about before, where you bought at 10,000, sold at 60, and so you have a $50,000 gain from that sell transaction, in the short-term period, if it was less than 1 year, that will be specifically according to the short-term capital gains tax rate, and you can see that on the screen right now. If you held it for longer than 1 year, that meets the long-term capital gains rate, and that will either be taxed at 15% or 20% depending on how much you're selling during that transaction. So in the end, it really matters how you are looking at your capital gains. Is it short? Is it long? And which rate you're going to be falling into. All right, so there's a lot of people out there that are using their cryptocurrencies not only just for buying and selling, but also for lending or getting some interest on their coins. And so people are wondering, what is the tax treatment for if they're lending their cryptocurrencies out? All right, so the answer to this one is going to be that it is no different than if you are lending your own US dollar out, right? This is classified as an interest income, and because of that, you will need to generate a 1099 to go over that interest amount that's coming along with it. And a lot of these big name exchanges and ones that you're lending them to will go ahead and generate that 1099 form for you. So these big name brokerages that are within the US will be issuing you a form 1099 to talk about your buying and selling, your interest, and everything associated with that. So what is a 1099? What is it going to tell you? Well, it's basically going to tell you what you bought the cryptocurrency at and what you sold the cryptocurrency at in US dollars. It'll also let you know when you bought it and when you sold it, and it'll let you know how much interest you have in those cryptocurrencies and how much you've had over the past year. And that 1099 will be able to be uploaded into your online tax service like TurboTax, and should make it pretty seamless for you to file your taxes easily if you're using one of these US-based cryptocurrency exchanges. Now, if you're not using one of the US-based cryptocurrency exchanges like Coinbase or Gemini or any of those, then they will not give you this specific particular form because they are not regulated by the US and they do not have to generate that form for you. But what they will do is they will give you a transaction history. It'll be a download that you can actually pull off of the website or that exchange. And it's going to be a .csv file that you can download and upload it into other different crypto tax services, and they will generate the 1099 form for you. Or you can actually use that .csv to calculate it yourself and upload it into your online tax service. All right, and the last one I'm going to talk about is going to be comparing these crypto capital gains to real estate capital gains. And so the question is going to be, can I defer my taxes now to reinvest them into another cryptocurrency just like I can do with my 1031 exchange in real estate? Well, the answer is no, you cannot. The IRS has explicitly said that crypto capital gains cannot be deferred for right now, like the real estate 1031 exchange is. And so a real estate 1031 basically is saying that I am going to defer my taxes for right now on this property that is generating me rental income. So specifically the capital gains of me when I initially bought the rental house at like $100,000 and I'm now selling it at $300,000, I would not have to pay taxes on that $200,000 gap if I was to buy a new property with that money that I sold before and move forward with it. I can defer those taxes for this time being. Eventually I will have to pay them. Whenever I sell off that property, I will eventually have to pay all those capital gains taxes that I owe the government. But for taxes associated with cryptocurrencies and those capital gains, we cannot reinvest those and defer those at this time. And so the IRS has been very explicit about that, and they do not want people to get confused about it. So not the exact same as 1031 exchange. So these are just some questions that some beginner crypto investors might be asking having to do with their taxes. I will be putting out more videos on crypto taxes, so make sure you turn those notifications on. And if you're interested in how to file your taxes for free on the IRS free file system, then I'm going to put a video up here that kind of gives you a direct way to do that and not have to pay your taxes, as who likes that. And then if you also want to learn a little bit more about how to get your taxes and how to file that online yourself, I'll put another link right here that'll go over that. And as always, I want to remind you to pinch a little bit.